in today's video, we're going to be going over a tool that you can incorporate in your investing journey that will help you to build wealth. And they are ETFs, exchange traded funds. By the end of this video, you'll know exactly how to go about choosing the right ETF for your portfolio. So, what is an ETF? It's a mix between an index fund and a stock. Imagine it's like a basket of stocks that you can buy in one simple package. It trades just like a stock on the stock exchange, but gives you exposure to a whole group of assets in that one investment choice. For example, if you buy the ETF VTI, you're investing into the entire US stock market, not just one company. Most ETFs are passively managed, which means they track an index instead of trying to beat it. This helps them to keep their costs lower, though there will be an expense ratio, a cost associated with these type of funds, but we'll get more into that. You can find an ETF for almost any sector. For example, technology, healthcare, clean energy, semiconductors. Or you can find one that tracks an index like QQQ, which tracks the NASDAQ, or VOO that tracks the S&P 500. Now let's get into what to consider when you are choosing an ETF. First, are you aiming for broad exposure like the S&P 500, or do you want to have a specific focus on a sector? This all depends on your goals. Is it growth or is it income? Me personally, I want both. I want to make sure that I'm investing into something that is going to have steady share appreciation as well as those consistent, reliable dividend payments. Next, let's go back to that expense ratio. And this is a big one. This is how much you are paying in fees to invest into a particular ETF. So when it comes to this, why pay more if you don't have to? And we'll get more into that. Many of the ETFs that I invest into have low expense ratios of 0.03 or 0.06, for example. Another thing to consider is the performance. On this, zoom out, look back for the last 5 years, 10 years. Past performance is not everything, and past performance is not an indicator of future performance, but it is something for you to reflect upon and use in your consideration when choosing what you're going to invest into. Look for ETFs with a solid track record. Consistency matters. How long have they been paying out their dividend? Has the amount been stable and increasing over time? Now, let's talk about the dividend yield and the DRIP. When it comes to dividend yield, I'm not just chasing the highest one because I want that balance between share appreciation and consistent payouts that have a long-standing history of not just paying out that dividend, but in time increasing it. We all love dividends, but don't just chase that high yield without considering all the points that we're taking a look at. It's that long-term performance that really matters. And now the DRIP, which stands for Dividend Reinvestment Plan. Does your brokerage have this available to you? This is a feature that allows you to automatically reinvest your dividends in order to buy more shares and build up your positions, which helps your investments grow even faster. If you do invest into an ETF that tracks an index, have an understanding of what you're getting exposure to ensure that that is what is in line with your goals. Like VTI, which we've already mentioned, it's one of my favorite investments and it gives me exposure to the entire US stock market, which is going to cover those large, mid, and small cap companies. Another thing to consider is investing into an ETF from an established, well-known provider like Vanguard, BlackRock, or Charles Schwab, which are names that you've probably heard of. They have a long track record, so you'll have reliability and transparency when dealing with them. Some other factors that might also give you some safety and security in your investment choice is the size of the company, the assets under management. Larger funds are going to be more stable and liquid, allowing you to have flexibility and buy and sell easily. So I want to go into etfrc.com. the ETF Research Center website that I use often to take a look at ETFs to determine fund overlap and other information. This is VTI. When you put in a particular ticker symbol, it'll give you lots of information all in one screen. There are multiple tabs here that you can dig into further. Looking at this description, we see that VTI is the Vanguard Total Stock Market ETF. It gives you detail as to what it tracks. It shows you here that it has a passive management style, which we talked about. It lists the assets under management at 400 billion. It shows you that it has a low expense ratio, which happens to be 0.03% for this investment. Gives you a sector breakdown, the top holdings, and the percentage at which it's weighted in the investment, the current number of holdings, and other information. If you go over here, you can dig into the performance and other details about the funds. So if you go to the ETF tools and click the drop down, it'll bring you to funds overlap, which is a feature that I like because most people don't want to have a lot of overlap in their investments. Right now, I have SCHD and VTI in here to check on the funds overlap. And we see here that there's only 7% overlap between these two ETFs. Now, taking a look at VOO versus VTI, we see that we have an 86% overlap. VTI is the entire US stock market, while VOO is the top 500 companies. And if we were to put in VOO and SPLG for another example, would see that there's 100% overlap between those two funds because they both track the S&P 500. So let's take a closer look at a couple of the investments that we were just using, taking a look at the overlap. So SPLG is managed by State Street Global Advisors. We see here that the assets under management are about 53 billion. And here's a look at VOO, which is the Vanguard S&P 500 ETF. So it's managed by Vanguard, and their assets under management are 444 billion. And this fund has a passive management style. It has a slightly higher expense ratio of 0.03%. But all of the key details about it, the sectors and the companies, are going to be the same. Now, this is the SPY, which also tracks the S&P 500 and is also managed by State Street Global Advisors, but it has a higher expense ratio at 0.09%. And this is the last one we'll take a quick look at, and this is SCHD, the Charles Schwab US Dividend Equity ETF. This is the one that I put in comparison to VTI that had a low percentage of overlap. This fund seeks to track the performance of the Dow Jones 100 index. And unlike the other funds that we've taken a look at so far today, like VTI or VOO, which are weighted by market cap, so they're going to be heavily into technology, whereas SCHD gives you exposure to a broader amount of sectors and well-known companies like Home Depot. So you can use the ETF Research Center as a way to avoid any heavy funds overlap. Another way I like to make quick comparisons to different funds is just using Google Finance and putting in two ETFs. For example, and here I have right now VTI and VOO on the 5-year, and you can see a comparison of the fund performance at a glance. So right now, with Bitcoin inching towards 100K and AI stocks like Nvidia thriving, it's tempting to chase just those type of investments. But by focusing on ETFs with proven stability, you will help your portfolio during times of high market volatility. ETFs offer diversification at a low cost. You don't have to pick those individual stocks. One choice can give you exposure to hundreds, even thousands. So do your homework, do your research, focus on your long-term goals, and consider incorporating ETFs to hold for the long term in your portfolio. If you haven't already, give this video a thumbs up. If you're not already, subscribe to the channel. Check out my links for Moomoo and Weeble. They will be in the description and pinned in the comments. What ETFs are you investing into? Are there any that you would like me to do a separate video on? Drop me a comment and let me know. Thanks for watching. Okay, bye.